In the last video, we talked about Cardano and his three friends. Unfortunately, two of those friends have let him down. That was the 20 and the 50 daily moving average. We've got one last friend that he's holding on to, guys. Is this friend going to be the one that is going to push price action to the upside? Because we've got FOMC pending. We've got Jerome Powell speaking tomorrow. Is he going to be dovish? Is he going to be hawkish? We don't know. The market's dictated by him, but we can look at the analysis and we can understand what levels need to hold. If those levels don't hold, how far is it likely to go back? How can you prepare for that? And how can you protect yourself along the way? And we'll start with the current price. What's happening with ADA right now? The two friends that we've dropped, the 20 and the 50 period moving average, the significance of that, guys, is we need to understand exactly how far we can pull back. If we pull back and drop this last line of support, i.e. the 65-cent level, then expect to go back down to the next level of support. When's this move invalidated, guys? Remember, you're putting in higher highs, you're putting in higher lows. Move's invalidated when you take out this higher low here. So that is a drop from where price action is now to the downside of 9.82%. If this gets dropped, guys, then potentially you can see further downside, or at least one thing, a test of this bottom here. You often see it time and time again as a bottoming pattern. If we come back down, test this area, there's lots of buy orders at this area, and then you get an acceleration to the upside. That would be bullish. That would turn from bearish to bullish. So there's a few things that I want to show you guys. What are these key levels? Key level here is a 61.8% retracement from this bottom here, going all the way back down to August 2024, all the way back down to August 2024 to its previous high. That was 3rd of December 2024. So the whole of 2025, we've been in a downtrend. We've been in a downtrend, and now we're holding the 61.8% retracement. That is the golden Fibonacci number. That's why that level is holding a strong support. He's our last friend, guys. We've also got clues look left. This build up a price action where we've got a rejection point here. Got a rejection point here, rejection point here. You slightly come above here, but then guess what happens? Rejection. So that acted as rejection until we broke through support, support. So you've got support there, guys, and this is where we are now, this line of support. So that needs to hold. You've got the 61.8% retracement from its previous swing. You've got that previous resistance that we broke through that is now hopefully going to act as support. Next thing that we're going to look at, guys, is the indicators. Where are we on the indicators? Because we said when we were overbought at this point here, at this point here, we'd expected a pullback. Where do you expect a pullback to, guys? You expect a pullback to make sure that you ensure that a higher low is put in. If a higher low is put in, when the indicators come back down to this level here, which it is, there's the previous one, there's the previous one. That's signaling that you're expecting to get another push up on the indicators, guys. They are lagging indicators. Price action's king. This tells you one thing, that we're reversing. We've put in a higher low. We've put in a higher high. We're coming back down. We're putting in a higher low. The indicators are coming back down as we're putting in a higher low. If we hold this level, guys, going into FOMC, and then we get some hawkish or dovish news would push price action further down. Dovish news would accelerate. Could get a driving catalyst, guys. We don't know what he's going to say tomorrow. Whether there's going to be a rate cut or not, it's expected that there's not going to be a rate cut. There's a high probability. But if he indicates some kind of sentiment that we're going to get more rate cuts than what we'd expected, I think he built in 1 or 2. If we get more rate cuts than what we're expected during 2025, that would make the market have positive sentiment. The market is built in that we're not going to get those rate cuts. If we do get the rate cuts, or we get a hint of the rate cuts, market needs to build in that we are going to get the rate cuts. That would create a catalyst. That would create stimulus within the crypto market. So not just the crypto market, guys, the world market. We talk about the M2 money supply, the flow of money, where liquidity goes, but ultimately they need to refinance their existing debt before they can borrow more money to put more money into the economy, guys. That's the aim of the game. To do that, they need to put on the printing press. To put on the printing press, they need to refinance. So it's as simple as that, guys. Unfortunately, we're dictated by what Jerome Powell says, what the Fed says. So we'll keep you up to date with FOMC, guys. But one thing that I did want to ask you, we've got a big Cardano community. Comment if you are in the Cardano community, because I'm going to create a Cardano server within the Discord group, and I'm going to allow 100 people within the Cardano community within this server completely free. So I'll create that server, guys. If you want me to create it, let me know in the comments. I'll see you in the next one.